news now for stocks that the charts want you to look at. For that, the expert cknarayan of Growth Avenues joins us. Good morning, Dr. Narayan. Good to have you with us this early. Well, first up, what's the Nifty telling you? The way it recovered yesterday is going long in the morning if you aren't already a given?
Well, I think the SGX Nifty has spoken for us already, having pushed the index up there pre-open, and we are it looks like we are going to open higher, and that is certainly following whatever macro numbers were declared last evening. So I think above 83.70, 83.80, we should be, the bull should be in the driver's seat for now, and I think given the fact that the market is a bit light in positions, we did see a lot of positions getting squared up, particularly in the Nifty itself, as well as in some of the stocks. So I think that would probably favor some continued advances if the opening strength is sustained into the, let's say, the first half hour of play or so. Then I would think we should probably head out till about 85, 85.25 on the futures.
Okay. So even if the market opens gap up, you would suggest going long if it crosses 83.70?
Yes, I think if it opens gap up and sustains that beyond 5 minutes, I would be particularly encouraged to go long, because that would show that there is a sign of strength and there are willing buyers who are very clear and about chancing their arms. So I think that's the kind of sign that I want to see, not tentative efforts.
Okay.
Okay. Dr. Narayan, good morning. Yesterday in late trade, we had a lot of buying in heavyweights like HUL, ICICI, L&T, HDFC. So the bluest of blue chip names. This morning, what are the top stocks that you would trade amidst that lot?
I think this is going to be an index-led rally, right? So I would stick with the main Nifty names rather than try my luck with the mid-cap names. So it looks like, in the names that you mentioned, somebody or some set of people seem to have got the wind of better numbers perhaps, and that is why some advanced buying in these leading index names happened in the last evening. I think it should probably carry into today, and we should have a very definite spillover effect in large cap names. So I would stick with the large caps and not really look at the mid caps too much.
Now that was my question, Dr. Narayan. Amidst the large caps, what are the stocks that you would trade this morning?
Well, you see, HUL has been flying for the last about 2-3 sessions. That is not its kind of character to keep on running for many days. So I wouldn't really chase down HUL at this juncture. But I still remain very bullish on it. What I would look at is for the banks to lead the pack once again, because I think until the dust settles on the, the interest rate business, banks will continue to flourish. And within that space, I think Kotak Bank and IndusInd Bank from the private sector bank space, and maybe Union Bank, Bank of Baroda from the public sector bank space. These would be my featured bets for the banking side. I would cast my net a little wider, look at stocks which are large cap but which have been into consolidation and are showing a kind of breakout. One of them I would identify would be Bata India, which I think is trying to stage a rally from here. Looks pretty good to me. At about 13.70-80, I would be a buyer in Bata. Oil has been under pressure, so Asian Paints is one of my picks, continues to remain a pick, and I would still look to buy Asian Paints. I would look to buy some of the other FMCG counters also. I think there will be a Hindustan Lever spillover into perhaps ITC. Maybe Titan would be another bet that I would put my money on.
Dr. Narayan, actually, I wanted you to develop that banking theme a little more. What's the strategy in the bank Nifty itself? Just go long, no worries.
Well, I wouldn't be as sanguine as that, because you did have that hit down in the last week. And somewhere around 19,000 levels on the Bank Nifty futures, there does seem to be some very specific supply. Now, we are coming up to test those areas again. Above 19,000 is a gap area, and typically on charts we treat all gap areas as being resistance areas because there would be supply in that region. So if the Bank Nifty clears about 19,000, 19,050 and sustains above that, then I think it would be a bit of a, bit of a green field for it to continue higher. But I would want to check whether the previous seller, who was quite emphatic at about 19,000 levels the last 3 rounds, I would want to check whether they are still around, because it's not open season yet for the banks. There is a little bit of a cloud over there yet.
Okay. A couple of other stocks, Dr. Narayan. What about Bharat Forge? We saw some renewed efforts in that stock yesterday. And Berger was behaving like as if there's only one way to go. And then we saw some deep cuts. Is 230 a kind of base from which it can actually increase?
I think you can paint all the paint stocks with the same brush right now. Whether it is Asian Paints, AkzoNobel, Berger, whichever, they're all going up on this low oil prices, and I think it's only a question of which fund comes out to buy which of these stocks. Now, stocks like Berger, they may face a little volatility because they are not very highly liquid items. So this kind of two-way movement, when somebody else comes in to take a little bit of profit, yes. But in the paint area, I would definitely remain a buyer on all dips, because clearly there is a lot of demand. There is a very clear expectation that these stocks are not yet expensive. So whether it is Berger or it is AkzoNobel or it is Asian Paints, I remain a buyer in all the paint stocks.
And Bharat Forge?
Well, Bharat Forge is, I think, one of those pretty unstoppable shares in the market right now. We have a few of them which seem to have absolutely no ceiling. Aurobindo Pharma and Force Motors, and there are various stocks which are strewn across the large and small and mid cap area. Bharat Forge in the large cap area seems to be having tremendous number of takers. It just drops down a couple of percentage points just to whet the appetite of those who are looking for a reaction to buy into. Then they come back into it with redoubled forces, and now that it's above the 1,000 mark, I think it'll develop a fresh round of momentum upside. And I think there is only one way to go: just keep buying the dips. I would plonk on a short-term moving average, let's say something like a 15-day moving average, or even a little shorter than that, and every dip into that I would be a buyer.
All right, Dr. Narayan, as always, pleasure speaking with you, sir. Thank you very much for joining us this morning.
Thank you.